Michael Shaoul, I feel like I spent the whole of 2017 saying, where's the vol? And then I was promised a lot more of it this year, and it's rolled over again.
You've had it. I mean, you had a lot of vol.
Was February it?
I think for the time being, for the S&P, yes. But you still have a lot of vol in global equities. I mean, EM has had a lot of vol.
Yeah.
Rates have had some vol. Commodities have had a lot of vol. So this isn't 2017 where just being long almost where you were, didn't matter. But look, I think the S&P is very close to an all-time high. You got to give a 10-year bull market the benefit of the doubt, or a 9-year bull market the benefit of the doubt. And the fact that the VIX gets down to 10 doesn't mean the market's going to start correcting again. It can stay there for a few weeks or a few months if it wants to.
Andres, perhaps some realistic optimism from Michael, but is February around the corner? I think that's what a lot of people are going to be asking if we go through that record high in the S&P again.
Look, no crystal ball on this side, but what I would say is that we could point to earnings and say, hey, 24% year-over-year earnings. Even if you look forward 1 year out, we're still looking at 8% year-over-year after we just had 24% year-over-year. So if they keep delivering, if companies keep delivering, it's hard to make the argument against equity. And one thing to keep in mind is in January, multiples were at 18, but because earnings have delivered, they're now at 17, even though we're close to all-time highs. Right, so valuation is a little bit stretched, but nothing that really is worrisome.